Welcome back. In our top business story, the UAE has been ranked as one of the top 25 global growth markets according to a new report by Ernst & Young. The accountancy firm revealed that Qatar recorded the fastest growing economy over the past 10 years. Egypt followed Qatar with an average growth rate of 4.9%, followed by the UAE at 4.3%, and then Saudi Arabia at 3.2%. The report added that the world's top 25 growth markets have grown more than 3 times as fast as advanced economies over the past decade. Ernst & Young also stated that growth in those economies is set to jump past advanced economies by more than 3.5% per year over the next 10 years. The 25 most rapidly growing economies are set to account for 38% of world consumer spending and 55% of world fixed capital investments, and by 2020 they will account for 50% of global GDP. UAE customers are turning their attention towards gold as a profitable investment. Demand for gold bars and coins in the third quarter rose 12% year-on-year. According to the World Gold Council, the UAE demand for jewelry, however, fell 24% for the same period, as more people instead invested in gold bars. Also in the first quarter of this year, demand for bullion bars and coins has been high. Demand rose 21% year-on-year and another 6% in the third quarter. Analysts say that the UAE's demand is in line with the global trend, which is that jewelry demand fell 10% this last quarter, while investment for bars and coins rose nearly 30%. Stock markets here in the UAE were up today, while the GCC markets ended mixed. Here's a quick overview. Fitch places a negative outlook on the U.S. credit rating. Earlier, we asked Tim Fox, chief economist at Emirates NBD, whether we need to be concerned that the next rating agency paints a gloomy picture of the U.S. ballooning debt problem.
Well, certainly, I don't think it would be much of a surprise if another rating agency such as Fitch were to paint a gloomy picture of the U.S.'s debt problems. As you said, Fitch was always suspending its judgment on the U.S.'s AAA rating following the decision taken by S&P during the summer to downgrade the United States. As such, any decision now to downgrade the U.S. would effectively represent a catching up with other rating agencies and may not have that much of an impact. Certainly, the U.S. fiscal position, though, remains one of the big question marks hanging over the global economy. As things stand, I think the failure of the Super Committee to come up with an agreement is not necessarily the end of the world, as $1.2 trillion of spending cuts will still be enacted from 2013. What has been lost is the ability to select which areas will be impacted by most of those cuts. However, other fiscal uncertainties do exist, in particular the issue of whether to roll over temporary tax breaks that were introduced earlier in the year. And with the political atmosphere deteriorating in Washington going into election year, I think fiscal policy will probably act as a drag on growth next year.